Hi, I am Dr.K.Rani, Assistant Professor, Department of Commerce, Dr. SNS Rajalakshmi College of Arts and Science. My topic name is Classification of Ratio. My subject name Accounting for Managerial Decision. Classification of ratio. For a better understanding of financial statement and a wider sense of the company fiscal position, we make the use of financial ratio. Now in all, there are a few ratios that are helpful and meaningful to stakeholders. For ease of understanding, they are divided into few groups. So let us study the types of ratio and their individual significance. Types of ratio. There are actually two ways in which financial ratio can be classified. There is the classical approach where ratio are classified on the base of the accounting statement from where they are obtained. The other is a more functional classification based on the use of the ratio and the purpose of which they are calculated. Traditional classification has three types of ratio, namely first one, profit and loss ratio, balance sheet ratio, composition ratio. Profit and loss ratio, when both figures are derived from the statement and profit and loss account, we will call it profit and loss ratio. It can also be known as income statement ratio or revenue statement ratio. One such example in the gross profit ratio, which is the ratio of gross profit to sales and revenue. As you will notice, both these amount will be derived from the profit and loss account. Other example including operating ratio, net profit ratio, stock turnover ratio, balance sheet ratio. Just as above, if both the variable are obtained from the balance sheet, it is known as balance sheet ratio. When such a ratio express the relation between two accounts of the balance sheet, we also can the financial ratio. Take for example current ratio that compare current asset, current liability, both derived from the balance sheet. Other example in liquid quick ratio, capital gearing ratio, debt equity ratio, composite ratio. The composite ratio or combined ratio compare two variables from two different accounts. One is taken from the profit and loss account and the other from the balance sheet. For example, ratio of return on capital employed. The profit figure will be obtained from the income statement and capital employed is seen in the balance sheet. A few other examples are debt turnover ratio, credit turnover ratio, earning per share, etc. Second type, functional classification ratio. Then we move on to the functional classification. The scale has grouped the ratio according to the function, the performance in our understanding and analysis of financial statement. This is more accurate and useful classification of ratio and hence more commodity used as well. The types of ratio according to the functional classification are liquid ratio, leverage ratio, activity ratio, profitability ratio, coverage ratio. Liquid ratio, a firm need to keep some level liquid so stockholder can be paid when they are due. All asset of the firm cannot be tied up. A firm must look after its short-term liquid. The ratio help determine such liquid so the firm may rectify any problem. The two main liquid ratio are current ratio, quick ratio, leverage ratio. This ratio determine the company ability to pay long-term debt. Activity activity ratio help measure the efficiency of the organization. Profitability ratio, the ratio analyze the profit earned by entity. They compare the profit to revenue or fund employed or asset of an entity. Coverage ratio, so the equalization between profit in hand and the claim outside stakeholder. These are stakeholders that are required by the law to be paid even in case of liquidation. Thank you.